Yeah. So before I introduce you, give what's a little background with you and WeFunder? How long have you been there?
I started working. I met the vice president of fundraising, Johnny Price, last kind of winter, and I actually started off at WeFunder as a venture scout, right? Someone who was kind of looking, trying to talk to founders and see if they wanted to raise capital in this way.
Mhm.
And then I ended up working for them over the summer, and I've come on full time even while I'm a student. Um, and my initial focus has been kind of building the ecosystem for people to use regulation crowdfunding as a way that we'll kind of go into more about what that is in a minute, um, here in Nashville.
Mhm.
Um, and now, as I really transition to really be able to focus on it more, I'm going to be focused on the Southeast, the particular region where I think the level of awareness of this as a tool, and as a way that you can raise capital is a little bit lower than, um, but it's a little bit lower than in California, where WeFunder's headquarters is in San Francisco, or in New York, where one of our competitors is headquartered. But also where I think there's a huge impact. Just capital moves a bit more slowly here, and there's a little bit less around for early stage companies, and WeFunder is a way to help do that, help address that.
Awesome.
And yeah, so I've been advising founders on how to raise capital for about 10 months now. But my background is like I spent my 20s mostly living in the Middle East as a consultant, and then I've been a social entrepreneur, and at one point I was going to be an academic. I have a master's in religious studies, so I've been all over the place.
Wow, that's awesome. I'm going to go ahead and introduce you for the folks that are on. This is Reed Ezell, everybody. Reed is the Southeast growth leader for WeFunder, an organization focused on supporting startups and entrepreneurship by helping them raise capital from their community customers and friends, aka crowdfunding, as well as angel investors. Regulation crowdfunding has only been legal since 2016, and its use is expanding, as you kind of touched on, both by companies raising pre-seed and seed rounds to get off the ground, and by growth stage companies interested in raising a community round to engage their customers as investors. Today, Reed will provide an overview of the regulations that support crowdfunding, examples of crowdfunding success stories, and advice for successfully raising capital through crowdfunding. Reminder that this is an interactive session. So if you look at the bottom of the screen, you'll see a chat button, a Q&A button. We encourage you to use both of those anytime you have a question or comment for Reed. Also, you'll receive a recap in the next 24 hours, and it'll include resources mentioned and a link to rewatch and share this webinar with your team. So I'm going to go ahead and let Reed take it away.
Cool. Is it okay if I share my screen? You didn't check that before. Oh yeah, I got it. Cool. Awesome. Can everyone see the blue slide? Yes? Thumbs up? I can't see everybody. Okay, I'm just going to go ahead because no one's saying anything. Great. Well, I'm really happy to be here today. WeFunder is I feel privileged to work for WeFunder. We are a new way to raise capital. I think a new kind of tool in the tool belt of any entrepreneur that wants to raise money. And as Leah said, my focus has been on kind of educating founders and investors here in Nashville on two things. One, that you can raise capital from your community, and also that you don't need to be a rich person to invest in startups. Traditionally, up until 2016, there had been a law in the books for nearly a century, since 1933, that had made it so that you had to have $1 million net worth or income over $250,000 in order to invest in private companies, right? And so that did two things. One, it limited access to capital to certain founders who don't have rich friends, and two, it prevented a large number of people from participating in what is one of the most dynamic ways to generate wealth, which is investing in early stage companies. So let me give you a little bit of background on WeFunder, kind of what we do, and then I'll be happy to answer any and all of your questions. I'll try to be through the slides real quick because I know staring at the screen is no fun. So this is our homepage. To go to wefunder.com, this is what you'll find. You can in just a few minutes you can create an account so that you can become an investor. Any person in America now can invest $2,200 a year in private companies. Now, if you have income over about 40,000, that number starts to increase up to becoming unlimited for people that are accredited investors, people with net worth over $1 million. But really, what we, at the most basic level, we believe that people should be able to invest in things that they believe in, right? In people, in ideas, in companies. And that's what we're trying to do. WeFunders raised over $500 million for companies in its lifetime. And over half of that has happened in the last 2 years, meaning that the interest and the number and quality of companies that are using this tool to raise capital is really increasing rapidly. So first of all, traditionally, this is called regulation crowdfunding. For short, it's called Reg CF. I think it's a really terrible term. Doesn't really mean anything to anybody. It's very sterile. And so we actually like to talk about this in terms of calling it a community round. A community round means you are able to invite your community in as investors. You can ask your customers to invest. You turn your customers into investors, they're going to stick around a lot more. They're going to become advocates for you. You can ask your friends and family to invest. And I think this is a really powerful tool for companies at all stages, and I'll get into that a little bit later. So just to a really high level about like what exactly this is. A law was passed in 2012 called the Jobs Act. It was a recognition by the Obama administration that entrepreneurship was on the decline in the country. And we needed to change that. And one of the issues for promoting entrepreneurship is access to capital, right? The statistics on the equity of like venture capital and traditional private investment in companies are pretty dismal when it comes to diversity. Last year, I think 2.6% of venture capital went to founders of color or female founders. 80% of venture capital dollars go to New York, California, and Massachusetts. And so it's a real there's a real hole to be filled here. In addition to that, companies are going public a lot later now, right? So if you use Uber as an example, right? They went public after they were valued at over $100 billion. They haven't really grown that much since then, right? So all of that wealth had been created. And if you were one of the early investors in Uber, you saw a massive return on your investment. But you and me as regular people weren't able to invest until most of that growth had happened. So today, with regulation crowdfunding, a company can raise up to $5 million from unaccredited as well as accredited investors. We like to say, raise from your community as well as rich people, a few rich people. Nothing against rich people, but I think it's really a lot cooler to raise from your community. You can publicly promote that offering. So traditionally, if you were raising angel capital, you could only kind of tell angel investors and promote that to angel networks. Now, when you're raising in Reg CF, you can post on social media. You can talk about the fact that you're raising capital in any earned media that you have. You can ask your friends to post on their social media that you're raising capital, and you can really build a community around it. And you can raise equity or debt. Most of what we do is raising equity, right? A safe note or a price round or a convertible note, the same mechanisms that venture capital firms invest in early stage companies. But we also work with like Main Street businesses. I'm working right now with a company called what will be a restaurant called Bad Idea. It's a really talented sommelier here in Nashville. He's going to open a wine bar, right? And the contract that he's offering is going to be a little bit of ownership in the country, but in the company. So you'll receive a share of his profit, but also you receive a share of his profit as a revenue share, right? That's a restaurant isn't going to grow like a company that you might invest in as an equity opportunity, but this is a way for him to be able to like engage the neighborhood and engage his friends. And if you invest $1,000, maybe it's more, you'll be on a list that makes it easier for you to get a table at the restaurant, right? So what this does is allow companies to not just have to have access to wealthy investors in order to raise capital, but you can also kind of activate investment around some other motivations, right? If I'm investing $1,000 in a company, and that's the average investment on WeFunder, I'm kind of more likely to invest because I believe in a person or I believe in a mission, because it's a relatively small investment, right? It's not going to really affect my retirement. If it goes to zero, then it's not going to affect my long-term outlook. And that's just a way to involve more people in this process. And I think that is really valuable. At WeFunder, our mission, as I think I might have mentioned before, is to democratize access to capital, right? We're all about democratizing this space. So just in terms of where we are today versus where we've been in the past, WeFunder has actually been around since 2012, which is when that law was passed. Our founder was engaged in lobbying Congress to get the crowdfunding regulations passed. But the growth of WeFunder has really happened since 2020. When the pandemic happened, a lot of angel investment and venture capital pulled back for a while, and people were in quarantine. So being able to raise online became really appealing. And so this is just a picture of our growth chart through the end of 2021. It's just really accelerating. What also happened in 2021 is that the regulations around this matured, and they increased the cap that you can raise from $1 million to $5 million. And there's clear regulation around kind of why, how the investment mechanisms that you can use. And it's just made it much more appealing to high quality companies to use this as a tool. So what we're seeing now is like venture-backed companies, raising a bunch of money from venture capitalists, but also opening up an allocation for their community. You can do both and. Or early stage companies, right, that maybe have a model that it wouldn't quite work for a venture investor, or maybe they don't have the traction they need. They can open up to their customers in the community first as a way to kind of demonstrate that there's demand for their product. So the way we talk about this is it's just an easier way to raise capital. It's easier because we're opening up a bigger universe of investors, and we're allowing you to publicly solicit investors. So in a traditional raise, you would only be able to talk to those accredited investors. Now you can talk to anybody, right? That includes your friends and family, includes your friends from college, it includes your customers. And as a result, you can raise more money faster, right? Instead of having to take a bunch of $100,000 checks, you can take a couple $100,000 checks and a bunch of $1,000 checks, or a bunch of $100 checks. And then on the back end of a raise, I think this is actually the coolest part about this, is you end up recruiting an army of champions for your brand. Think about the power of having 1,000 people who've invested somewhere between $100 and $5,000 in your company. Now those people, like I said, the stakes of that investment aren't that their livelihood is tied up in the company, but it doesn't take much to turn someone from someone who likes your brand into a net promoter of your brand, right? Someone who's going to go out and talk about it, or someone who's going to tell their friends to go use it, or someone who, when something goes wrong, maybe they have a bad experience, they're going to give you feedback instead of switching to your competitor. And I think having that army of champions, particularly for an early stage company or a consumer facing company, can be really, really powerful. And I'll go a little bit deeper into examples about that later on. And just really quickly, who's a good fit for this? You can, on WeFunder, you can raise anywhere from $50,000 to $5 million a year. You can do it year on year, so you can keep doing it. The $50,000 cap is just kind of a company needs to get to that threshold before we will go through the work of filing with the SEC. And so they're officially raising capital and selling a security. But anyone trying to raise in that range is a great fit. Even if you're trying to raise above it, that $5 million cap is really soft because you can do this in parallel with a more traditional Reg D. I don't mean to get into jargon. A more traditional like angel investment round, and so you can kind of, if you have accredited investors, you can move them over into that and create more room for the crowdfunding round as you raise capital. And like, what's the key to success? I mean, I think the most important part of this is hustle. Now, if you're a successful entrepreneur, if you're an entrepreneur who's going to be successful, that's a characteristic I think that every entrepreneur has. But the reason we say that is like, it is a way to raise more capital faster. However, it's not an easier way to raise capital. You're going to be able to talk to more people, but you need to reach out to more people, right? And so there are dividends in that opening that conversation and speaking publicly about what you're building and your milestones, and that takes work, but that hustle will pay off because particularly if you have a good investment to offer them, people are going to respond. This isn't like a magic tap you can open and money will pour in. You need to have a good investment, a good structure that provides an upside for the investors. This is a big difference between traditional like perks-based crowdfunding and what we're doing. We are actually selling a security here. And so people are looking for an investment, even if it's a revenue share deal where people are looking for 1 or 2x over a couple years, you still need to have that upside available to the investor. But the most exciting companies on WeFunder are companies that are really offering exciting solutions that are gonna grow and might 100x your investment. And then another key here is actually having an audience, right? And this can take many forms, but I think this is rather intuitive. But if you're trying to raise money from the crowd, having 50,000 followers on social media or having an engaged email list, those are both huge advantages here. Now, what we like to say is you probably need 2 of the 3 of these things to be successful on WeFunder, right? You can overcome not having an audience with hustle. You can probably overcome having maybe not the best investment available ever by having a strong and loyal audience and working to communicate with them. But kind of 2 of these 3 things, and ideally all 3 of them, are what are going to breed success in this space. And then this is just a little bit about WeFunder specifically. Now there are other platforms in this space, but WeFunder is, obviously I'm biased, but I think we have the best structure and a few advantages over them. One is that we're the biggest in the space. Our market share last year was just over 40%. Early indicators and this year is that we're probably going to be over 50% this year. We're continuing to kind of outperform our competitors. We have over 1 million investors active on WeFunder. So when you raise on WeFunder, most of the money is going to come from your community, right? You're going to probably 80% of it's going to come from the people that you already know or the people that you reach out to, people that come to WeFunder because of your deal, not people that are on WeFunder and discover your deal. But there's a big crowd there that when there's an exciting deal or when you're raising with a lot of velocity, that crowd does amplify the impact. I'm based here in Nashville, but we also have a team based here. We're going to share with you guys some information about an event we're planning on April 7th, very soon. But WeFunder is really dedicated to this place. On April 7th, we're going to have about 15 companies that have campaigns live on WeFunder, and I'll show you a page in a minute that kind of shows those companies. But they're all based here in Nashville, all raising capital. And what we're trying to do here is, my goal is to make Nashville the most crowdfunded, the most equity crowdfunded city in America. And we're not close to that yet, but there are a lot more resources here and there's more dedicated focus here than you might find in other places. And then finally, we have the best fee structure. Basically, the cost of raising on WeFunder is, our standard fee is actually 7.5%, but in Nashville, we're offering a discount to 6.5%. That 6.5% fee is completely inclusive, and you'll never pay us anything up front. So that's just taken out of the success of your raise. And it includes the management of those investors afterward, right? WeFunder will handle all of the tax documentation and all the filing necessary to get your raise up and to close your raise, and then to communicate with and to get tax documents to your investors afterward. And then we also offer you help, in our expertise in fundraising. One big caveat to that fee structure, though, is that if you are raising on WeFunder and you bring an investor with a check of over $25,000 to the platform, we actually take 0% of those investments. The reason we do that is basically that's probably an accredited investor. That's someone that you already knew that you would have approached and who probably would have invested regardless of what you did. And so we don't have any right to that money. The reason we want that to come through the platform, though, is that those big investments are really strong positive indicators to the crowd. And so the more big investments that you can bring in, the more little checks that you wouldn't have been able to raise off of WeFunder will come in. And the more little, and we will take 6.5% of those little checks, and you'll get 93.5% of checks that you probably wouldn't have had access to otherwise. So beyond that, we also, basically the structure of what WeFunder is doing is very similar to what an angel syndicate would do, an angel investing syndicate. There'd be a lead investor who creates a special purpose vehicle, an investment LLC. That person is going to control that vehicle, and you, as the investors or the people that are interested in investing in the company that they're going to invest in, are going to pool their money in that SPV, and then it's going to buy shares in the company. We do exactly the same thing. So as an investor on WeFunder is getting preferred stock, so there's a liquidity preference in the event that the company is acquired or goes public. And legally, that structure is pretty identical. The only difference being that in a WeFunder SPV, anyone can invest. And so you're able to take, not just checks of 10,000 or above, or whatever an angel syndicate's limit would be. You can take literally anything down to $100. So everyone can participate. Now, I'd love to open it up for questions, but before I do that, I've got a few slides here to talk about local companies that have raised on WeFunder. And then I'd love to share a link that is private right now, but I'll show it to you guys. So this is Earthrides. This is a local company here in Nashville. It's a platform. It's a platform for ride sharing, right? But they only use electric vehicles. That's the only difference. Earthrides launched in October of 2022. October of 2020. And when they launched, they were out on the street handing out flyers, obviously trying to publicize the service. But those flyers also had a QR code that took you to their WeFunder page. And they were able to build early traction because they turned their early customers into investors. I think their campaign is actually now over $1 million. This is an old screenshot, but they were able to really kind of prove the validity of what they were trying to do early on. And in that way, they were able to leverage that to take on other investments. They raised probably 2 or 3 times the capital over the past 18 months off of WeFunder, but the WeFunder campaign was kind of that initial validation. And that, I think, is one of a really cool use case for WeFunder. Raven, the Raven Hernandez is the CEO of Earthrides. She's in that picture right there. Is also one of the first women, Latino women. I think she's number somewhere in the 30s on the list in the United States to raise $1 million in capital for a startup. And I think that speaks to WeFunder being a space where a more diverse cross-section of founders have an opportunity to raise, right? Letting the people choose what a good investment is rather than a bunch of old white dudes. No offense, I'm raised by an old white dude, but that's the venture capital industry. It just tends to not be that diverse. And those perspectives tend to affect where people invest. Something we're really proud of is giving founders that don't have access to traditionally have access to like really robust capital networks. This is a way for them to get noticed and to raise that capital so that their startup can, get to the stage where they're raising an A series, a venture round. The hemp space is another great space for us. We've seen really great campaigns. This is another Tennessee company, Hempatecture. They create insulation out of hemp plants. We can't, I would imagine that the rest of the cannabis space would be a really productive space for us to raise in as well. It's a consumer industry with a very loyal following. But we can't do the banking regulations do that. But we do work with hemp companies, people that are, not raising non-intoxicating forms of cannabis. This is a really cool raise. This guy's actually going to be in town this week, I believe, for Innovation Week with Launch Tennessee. And it's just been a really great one for us. Pencilish is another local company. They're based in Franklin. And there's some people who call that say, oh, that's Nashville. I'm a Nashville native. I distinguish between the two. But this is a crowdfunded animation studio. This guy, I think his name is Tom, used to work at Disney, and they've created an animation studio where like the investors, there's over 3,000 of them now. They ended up raising over $2 million in this campaign. Are going to have a say in like the projects they pursue, which is pretty cool. It's a good example of the additional externalities that this allows, right? By engaging the crowd, you're able to like build this relationship with your customers that is quite extraordinary. This is another smaller kind of pre-seed raise. A company trying to make meat sourcing local. I bring all these up because I think it's really interesting how diverse the companies that have raised on this platform are, all the way down to the Chattanooga football club. This is like the Green Bay Packers of minor league soccer, right? They're not an MLS team. They're a USL, I think is the league. But they raised, I think in 2019, a bunch of community members raised almost $1 million to make this team happen. And you can see, I think there, right, the benefit of engaging the crowd there, right? Like if I'm an investor in this team, I'm going to show up for the team. I'm going to go up to the games. I'm going to, buy a jersey and all these things. I think that is just a really cool demonstration of how a business can engage their customers in a really unique way using this tool. And with that, because I've talked for almost 30 minutes now, I'm going to go back to this slide here and stop. Actually, I'll just stop sharing. And I'd love to answer any questions that you guys have. Oh, great. So I appreciate you, Leah. How do you get started? I think one of the coolest things about us is that you can really start very quickly. And there's no commitment up front. This is actually a new feature in the industry where when it was originally created, right, you would have to file with the SEC, and that took like a month. And so before you accepted $1 of investment, you would have already had to file with the SEC. There's a little bit of, you have to get your financials in order. There's some costs up front. And so then if you end up not being able to raise any money, it's a pretty big disappointment. Now, literally, if you're ready to raise capital, if you're ready to raise money anywhere from $50,000 to $1 million, and you've got a deck, like you could send that to me today, and I can have it ready to. I can have a page for you, really ready in about 15 minutes. Now, it's probably not the final version of the page, but you could be ready to take investment in 15 minutes. Now, when you launch that quickly, you're in what the regulators call testing the waters. And so basically what you would say to all your friends is that, like, we're testing the waters, we're testing interest in raising capital through a regulation crowdfunding campaign on WeFunder. Send them the link, see what, ask them for feedback, and you'll probably get your first investments that way. And only once you have secured $50,000 in interest will we file with the SEC, and then you're really committed to the raise. But there's no cost to getting a page set up on WeFunder, and there's really no barrier to entry. So oftentimes what I'll do is I'll talk to a founder and say, like, send me your deck, let's look at it. I'll throw a page together for you. I'll make up a title for your page and pull out the kind of biggest 3 selling points for your campaign. And then, like, just this afternoon, send it to your 20 closest friends, right? And what usually happens is, obviously, you send it to your 20 closest friends, like 8 to 10 of them are going to come back and invest something. Maybe somebody invests $1,000. If you get lucky, somebody invests more, might invest $5,000. But you're going to end up at the end of the day, like, understanding that there are people ready to invest in. And I think it's starting there. And then the next step is, there'll be some back and forth. You refine your campaign page. By the time you launch publicly, you're going to want a campaign video up that can really kind of, in a minute and a half, express what your value proposition is. But the second step after, just testing it with your closest friends is, like, just make a list of every connection you have. If you've been in the business world for a decade, there's probably somewhere between 300 to 1,000 people whose email you have some sort of rapport with, that might invest $100. And so then the next work is sending it out to those people. And then go think of the friends that that might write bigger checks, the people that are, angel investors who do professional investment, and pitch to 20 of those guys, right? And that's a lot of work. But at the end of that, what you're going to end up with is a lot of people that didn't invest, but know that you're raising capital, a good number that did, and then a whole nother group of people will have signed up for updates to follow your campaign. And that's the seed of what will end up being a successful raise, right? You get 100 people in with a little bit of money, and then you say, look, now now that you're an investor, help me find more people that are interested in what I'm doing. I'm working with a company right now. The founder's name is Emily Bruce. She's based here in Nashville. Her company is called Peer Connect. It is a platform to help. She's a therapist by trade. She works with young children with learning disabilities and developmental delays. And it's a platform to connect therapy resources to those families, to connect families to one another. Because one of the biggest issues that she saw among those families is that they struggle to find community, right? They struggle to find one another in, a regular play group. Their child might not be included very well. And so there's a real need there. Now, her company isn't going to raise $1 million on WeFunder, but there is a real community of people out there that emotionally know that this is a need. If you know anybody that has raised a child with autism or any other learning disability or developmental issue, like, kind of on an elemental level, the struggle that they have, and she's solving a problem for them, right? It's not necessarily a venture backable business today. Maybe it will be once she's got some more traction and she's built the platform out more. But there are people out there that will invest in that solution. And Emily is an incredibly hardworking person. She's hustling, and she's like, she's raised close to $75,000 on the platform over the past 6 weeks. Now, no, that's not a huge. That's not going to keep her business going forever, but it was a huge step forward. And that's, I think, just a great example of what this can do, right? It's opening up that option of engaging investors, engaging a community for people that might not be traditionally investable opportunities if only you're investing a large amount of money. I'm seeing a question from Dave here, and Leah, let me know if I've missed anything. So yes, the answer is yes. Dave's question is, do we provide materials to help potential investors evaluate the opportunity? Oh, actually, this is from the other direction, or from a fully financial perspective. I'd say, I mean, the pitch page is the best place to look for that. We are working on more material, like more tools to help educate investors and help them evaluate deals. But we really see ourselves as a tool for the founder to use to communicate to a larger number of people, right? This is about opening, we're a marketplace and a place that helps the founder communicate what they're trying to build. And so I honestly, I have not that much interaction with the investors. That being said, we do create, there's a bunch of videos on our YouTube channel, and there are links around to like investor resources and stuff. But that's not really a focus in terms of ours in terms of our product at the moment. I think the way I look at this industry, right? It's very new. Effectively, it's just since March of 2021 when the regulations matured, it really became a viable way for a lot of companies to raise capital. There's two sides of this, right? There's the supply side. We work primarily on the supply side, right? We want to bring as many great deals to the platform as possible and give investors the opportunity to invest. But there's also the demand side, right? Most people who aren't wealthy don't think about investing in startups in this way, just because it hasn't been legal for a long time for them to do so. And there is something to do. There is work to be done in terms of educating them. But yeah, it's not kind of a place where we spend a lot of time thinking about it right now. I'm reading the next question. What smaller trends are you seeing with the increasing use of crowdfunding and WeFunder? What industries do you see taking advantage of crowdfunding and WeFunder most? Like I said, it's all over the place. Our platform is really industry agnostic. We've raised community rounds for unicorns, companies with valuations over $1 billion. And then we've helped restaurants. There's a fishing boat in like San Diego that raised $100 and something thousand to get outfitted on WeFunder. There's some quirky deals out there that aren't necessarily what you would say are like universally great investments, but they are great stories, or they're using WeFunder as a tool to be able to marshal that capital from their community into the company. I'd say the best deals out there, though, on WeFunder tend to be in the technology space, fintech in particular. I mean, WeFunder is a fintech. When we raise capital again, and that will probably be pretty soon, there will be an opportunity to invest in WeFunder. I already have equity in the company, but I'll probably be investing. I think the outlook is pretty strong. Recently, we did a community round for a company called Levels Health. Levels is a wearable, continuous glucose level monitor. And so, I mean, that's a medical device, but it was a pretty tech-focused company coming out of Silicon Valley. They were a really great, strong raise for us. Some of the other platforms are like more focused on real estate deals. We will do real estate deals, but it's not our focus, and the crowd of people that we have on the platform are probably less interested in that. But on WeFunder in particular, I think it's technology and CPG, like consumer packaged goods, has done really well. there's a company called Curl Mix, which is it's a hair and beauty line like designed for Black women. They had a really strong community, and they were able to raise 5 million. They were one of the first companies to raise $5 million on WeFunder. But like fintech, CPG, and consumer packaged goods, I think are probably the three strongest. But like, I talked to a company today that's trying to raise some money they're developing a new nanotech material to go in bike helmets and football helmets, right? It's all over the place. In terms of, just to make a comment about smaller trends, right? Increasingly, and I think this is the most exciting trend in the space, is that with this new $5 million cap and the clarity around regulation, and also just some the negative stigma around a serious company crowdfunding is going away. We're seeing more and more venture-backed companies where a VC firm is going to invest $1 million in the company, and then they will lead the round on WeFunder. And so then the VC firm is like giving us the signal. This is a great deal. This is something that we see. A VC firm is not going to be investing unless they see 10x or more potential. And there are more and more deals like that coming on board. And I think that it's just a really exciting time. How many companies have hit the $5 million mark? I should know that, and I don't. I'm going to put the number at around 10 on our platform. WeFunder is one of them. CurlMix is one of them. Mercury Bank is a bank for startups that raised part of a $125 million round. They had a venture-backed round that was $125 million. 5 of it was done on WeFunder. Levels Health. Adam Limbs is a tech company that develops AI-driven prosthetic limbs. They had a $120 million DARPA grant to over 10 years to develop this technology, and they've raised over $5 million on WeFunder. I think in this next year that number is probably going to quadruple though. Our pipeline, and I can't really comment on some of the companies that are going to raise, is really strong. There are some really great companies there. I'm getting a lot of questions from Leah here. I'd love to answer anyone else's questions. What her last question here is what links would I share with you guys? And what I'll do is send over more materials, kind of give you guys a better understanding what this is. We have a link to some case studies, just so you can see like some cool companies that have raised and how they have engaged their community. I'll also send over some background information about just like what this looks like. And there's a blog post that my VP of fundraising recently wrote, kind of like, if you want to raise $1 million on WeFunder, here are 15 steps to take. And I think, raising capital is hard, and this is an unfamiliar way to do it. And so we're always working on simplifying this a little bit and making it easier for people to digest how to do this. It's a really exciting time, I think. Just the ability to, going back to our mission at WeFunder, democratizing access to capital. Personally, I believe this is like an important thing to do on a societal level, given the level of wealth inequality in the country. But just the idea that anyone can invest in a startup is a pretty cool thing, right? That's how entrepreneurship used to happen, right? You showed up on the frontier in a town, you looked around and you said like, hey, there's no hardware store here. And so you went around to your neighbors and you said, hey, give me $10 and I'm going to order, then I'm going to start a hardware store. And then you pulled the $200 from your 20 neighbors and you sent off to St. Louis or wherever it was, and you ordered a bunch of hardware and built a hardware store, right? It fills 2 holes, right? That hardware store is probably going to be successful because it's filling a need in the community. So you're helping your community members out. If it's successful, they're also going to have a little bit of the upside. and there's a new service available in the community. And I think that's just a really powerful thing. And then the other side of this is, that investor demand. As we see more and more quality companies raising, the idea that a college student could invest $100 in a company with the potential of like an Uber next year, and in 10 years time, that $100, if you invested early in Uber, would have ended up being like $100,000. There's that type of potential, right? And I really believe in the opportunity that it can create for founders, but also the opportunity for wealth building that this can create in the longer term. If there are any other questions, I'd love to take them. I don't know if you're able to come off mute, but feel free to hop in.
Any last questions before we wrap up? Still got Reed for like 10 more minutes if you have any questions.
Yeah. I'm happy to hang out. I think I'll throw my email in the chat. Someone said that they work with startups. I love people that work with startups. Like I would love to be in touch. And this is like a small thing, but it's better than a punch in the face. I would say that if you bring a company to us and they raise more than $50,000 and they kind of end up live on the platform, there's $2,500 in a referral fee that comes back your way. You can either invest in that company, or you can take it out as cash and buy a plane ticket somewhere. But it's a little incentive to help us out. But yeah, I mean, our team at WeFunder is really passionate about this mission. I think I said at the beginning, we're actually a public benefit corporation. We're like, our chartered mission is democratizing access to capital, which is why we really focus on these statistics in the investment industry and bringing equality, helping female founders, helping founders of color find traction with investors. We just really believe in it, and I'm excited to work with anybody if they're looking to raise.
I have a question. One last question.
Yeah.
Is WeFunder an app, or is it a website, or is it both?
There is an app. I would recommend staying on the web. The app is like we're working on improving it. But I mean, WeFunder is a startup as well. Up until about 2 years ago, there were 12 WeFunder employees, and now there are about 75. So we're a rapidly growing company. We're probably going to be, closer to 200 by the end of this year. But yeah, it's WeFunder.com. WeFunder.com/explore is where you can go and look at all the deals. And then before we sign off, I want to show you guys, this is kind of a sneak peek at two things. One is this is a beta product. So if you have an eye for design, please don't laugh at this webpage. But so one of the things that I've been really focused on, and this is kind of going to be the end of my effort to establish this within WeFunder, is like building local community around these raises. One of the ways that we can really help founders who traditionally wouldn't have had access to capital is focusing on organizing investors locally. So this is going to be the Nashville community page. It's going to be the first city that has one. But listed here are all of the companies in Nashville that are currently raising. So we're going to have this event on April 7th, and basically, and I'll share the link to register for that event. If you're curious to learn more, all of these companies are going to be at that event, and they're going to pitch, and everyone's going to be able to invest live, which I think is just a cool thing, right? So everyone's pitch page will be there. When the founder's pitching, there'll be a QR code, and we're going to encourage people to write checks, little checks, big checks, whatever they feel moved to do. But the idea here is to kind of accelerate the velocity of capital locally for companies that might struggle to raise, right? There's plenty of money in Nashville. It just traditionally gets invested in healthcare companies. And the expectations of investors are oftentimes skewed by that, right? What we hear oftentimes is like angel investors who consider themselves to be early stage are looking for $1 million ARR, annual recurring revenue, which for a tech company is just like, that's 5 years down the road. So we are really looking at ways to help with that. And the other thing, I did this wrong, so I got to stop sharing for a sec. This is something that we're really excited about. We're working on really rebranding regulation crowdfunding. I think I mentioned community round, but regulation crowdfunding is a pretty bad term. So this is communityround.com, which will be a WeFunder website. We're going to be announcing this early next month. But the goal here is really to raise awareness of, and this actually goes back to the question of people who've raised $5 million. To raise awareness of these really high quality companies that are raising using this tool now, right? Mercury Bank had a $1.6 billion valuation and was backed by some of the best venture capital firms in Silicon Valley. Levels Health is the same way. I'm not sure what their valuation might have been sub $1 billion, but they were raising a $12 million round. Rome Research. These are all companies that have real traction, are really great investments, and they either have raised or will raise on WeFunder. So these are companies that are planning to raise on WeFunder. So what I would say is look out for these investments because they're going to be very good ones. But there's many more like this that are in the pipeline. And we're really excited about this for two reasons, right? Because first of all, these are great investment opportunities and it's cool to have them on our platform. But second of all, we see this as like, lifting the floor for everybody. You see seeing more and more quality companies using this tool. I think it will create more investor demand, and it will get more people on there looking at the deals. And ultimately that's a big help to, the little guys out there. It's something that our focus is on democratizing the space, but one of the really powerful levers that we can pull is by focusing on quality at the top of the top of the heap. But yeah, I'll be quiet now, Leah. I'm sorry, I've said that twice now.
Oh, no, you're good. Thanks so much for answering that thoroughly and giving us that back end view. That's really awesome to see. And I'll make sure to include the link to that Nashville event that's coming up. Sounds really exciting. So I want to thank you guys for attending. We are pushing up on our time. You'll receive a recap of the next 24 hours. I've mentioned that a couple of times. You'll get the recording to rewatch. And then, like Reed said, he has a couple of resources that he'll link in there for you. Be sure to check out petracoach.com and click on our events tab to see all of our other upcoming workshops and webinars and view our previous ones. And as always, if you have any further questions or we can provide some additional help for you or your organization, please reach out at info@petracoach.com. Reed, thank you so much for being with us today.
Thank you for being here, and I really appreciate the opportunity. So thank you very much. Reach out. I put my email in the chat, and I guess it'll be sent around. So please reach out if you're curious. I'll also share my meeting link. So I'm always happy to talk to anybody that's curious about raising. So just consider me a resource.
Awesome. Thanks so much, Reed.
All right.